Since the 1992-1993 crop season, COCOBOD has consistently and successfully obtained receivables-backed syndicated loans each year from the international money market to finance its cocoa purchases and ensure that farmers receive prompt payment for their cocoa beans. The latest syndicated loan facility for the 2020-2021 crop season, worth $1.3 billion, which is expected to aid in purchasing about 900,000 metric tons of cocoa for the season, was facilitated by a total of 28 banks made up of only 4 local and 24 international financial institutions, and will attract a competitive interest rate plus LIBOR of 1.75%. While appreciating the important role that international banks have played over the years in the syndication process, Board Chairman of COCOBOD, Nana Otuo Acheampong, says the profits associated with arranging the annual loan facility will continue to go to external financial institutions if local banks do not build enough capacity to take over the arrangement. But how soon can Ghanaian banks take over the process, and what are the issues at play? Banking consultant Nana Otuo Acheampong spoke to Citi Business News.
All of them are to take part and pull a quarter of their capital together to do this. In the short term, it's not possible. But in the medium to long term, once they are able to build up their capital and move their single obligor limitations up, then they can do it.
Nana Otuo Acheampong also spoke on the interest rate disparity that exists between local and international financial institutions and how that serves as a drawback in terms of the role local banks can play in the syndication process.
Possibility of doing it from capital perspective is not a problem, but from a pricing perspective is almost impossible. Why? Presently, COCOBOD borrowed at 1.75 basis over LIBOR. Now, LIBOR 6 months as today, when I checked, was 0.21. Now, add that to 1.75 and you are around 2%. Now, there's no way any of the 23 banks in Ghana can lend at that rate. Even if you add as much premium as 5 or 6%, it's still well below what they can get internationally, because the cost of capital within the macroeconomy of Ghana is high. Presently, we are looking at an MPC rate of 14.5 and a GR rate of 14.77. Now, there's no way any bank can lend below the MPC rate, let alone the GR rate. And therefore, they cannot match the 2 or maximum 3% that COCOBOD can get from foreign banks.
Hi guys, I hope you enjoyed this video. Subscribe to our Citi TV YouTube channel for more videos on the Business Dashboard.
Tune in and stay updated on the key business news stories of the day with Business Dashboard every weekday at 7 p.m. only on Citi TV.